Hello and welcome to Michael and Ivanka's Grand Podcast, a weekly podcast where we figure out what we think about everything in the known universe. My name's Michael Forrest.
And I'm Ivanka Majic.
And this week we are going to talk about what we have learned recently about finance, about investments. And none of this, as I've learnt you have to say, is financial advice, people. Do never take my financial advice.
Oh, mine.
I've been. We're going to talk a bit about like the investing apps, like modeling your portfolio or whatever, cryptocurrency versus like traditional stocks and shares as we understand it. Bit of P2P. Lending, that kind of stuff, maybe some, crazy Web3 kind of crypto stuff, inflation. It's not going to be boring though, because we're not going to use jargon. We're not going to be like investor types. We're just going to try and say it in as clear terms as we can.
See if we can learn something by talking to each other. Michael's had a bit of a resurgence recently, and I've looked last couple of weeks. Is it you've been looking at investing things?
Yeah, well, over the last month or two, really. I sort of did an experiment in bitcoins,
right?
With the caveat of sorry, but I'll say why I picked the sort of crypto space in the end. But yeah, that is the episode. So let's play the titles and then let's just record a podcast.
Let's do it.
Let's go. How's it going, Ivanka Majic? I haven't seen you for a couple of weeks. Well, I have, but we haven't as the audience. How's it going?
I know, we're the audience. It's going well. It is. So it is. I do believe I had a great week. We weren't recording last week, so I was working on some interesting workshops facilitating for the World Food Programme of all people. But more excitingly, in a column of good stories, I got feedback on my book, and it was very positive.
Yeah, author.
So I got to celebrate, and then I had a couple of days of digesting because I couldn't look at it. And then obviously one looks at the comments and the feedback, and one realizes overall it might be good, but like, there's still work to be done. Still a couple of gnarly bits of story that, because I wrote it sort of out of sequence and reordered it and all sorts of things like that. Now I've got to sort of smooth the bits that were written at different times in different orders and make sure that it all works together as a book, which is a whole new thing. But overall, bit of a boost to me. I felt very lifted. So that was nice.
Well, that's splendid news. I'm glad that you are getting to that last, the final stretch, it sounds like. Is it going to be one of these final...
I'm getting ready for the glory.
Yeah. Is it going to be one of those final stretches that takes as long as the entire rest of it, or do you think it's really going to be quick now?
I don't think so. I think I did a lot of work on that second draft, and now largely it's going to be a question of which bits of feedback I decide to action and which bits of feedback I go, that is a valid point. But as the author of this book, I choose not to take that feedback on board, because I think you do have that right. It's like, this is my book. Yeah, I could go into that, but I'm not going to. Or, so it's that sort of, and then so that's where I'm at. And I think, there's a risk of never putting it out into the world as well. Like, is it good enough, like on a reputation management, on a personal satisfaction level? First book, it'll probably leave some questions unanswered, unexplained, but then people can invite me on their podcast and help me promote the book to clarify this one. No, it won't be deliberate, but yeah, if there's anything there, or second edition.
So that's a thing, isn't it, in books?
That's
Updates.
a thing. second book, follow-up book. I'm
Patch
starting a whole
notes,
new line of
patches.
business. But it isn't meant to be a big academic, exhaustive. Is the word tome?
Tome is
Maybe
a
as an
word that can
author,
be used.
I should know how to use it. It's meant to be more of a, sitting alongside somebody that's been doing this for a while and learning from them thing. So there you go. I got one comment from a friend who went, "Oh, so you're just declaring this as fact, are you?" Yes, I am.
That's how authors do things. That's how you
That's the
write.
rule.
That's how you be an expert.
Yeah, just go, because I had loads of feedback on removing "in my opinion" or "I think" or "if I were to give you advice." It's more like just say it. Okay, I will say it. So there
I
you
saw
go.
a rule like the best way to find out the answer to a question on the internet is not to ask the question; it's to post the wrong answer. So you'll get
Clever.
people. If people correct you, then you'll find out the right answer.
Oh,
So there you go.
that's good to know. I like it. Right. So, how are you, Michael?
How am I? I've actually had a really interesting couple of weeks on my. So I started this experiment for. I said 2 months. I'm not going to be allowed to write code. So I've got to do everything but. And I've had a really interesting experience as we had the MVP conversation. We had we talked about that like a couple of weeks ago. So last week was this really interesting. So what I noticed, what I realized was what I usually do when I work on something and release it and tell everyone about it is I put something out and then I sort of wait, start checking, check for notifications, see if anyone's replied, see if anyone's liked it, and then I'm sort of anxious about it and I'm like, oh, maybe I shouldn't have done it, maybe. But last week I didn't really, because I didn't have anything else to do but promote. I'd release one thing and then I'd release the next thing and then I'd record the next thing and release that, and so I was sort of so anxiety levels on top of one another, one at a time. So it's and now I'm anxious about 2 things, 3 things, and so I had a really high octane anxiety levels in the evenings last week, but it was fun in that social way. I love in the way that you've had such a sort of intense social time that then you want to turn off your phone when you get home. And so I did that. I finally set up Apple Focus, whatever, do not disturb, so that when I get home it stops Twitter notifications and stops work notifications. And just gives me just, and then I put my phone upstairs just so that I can load up all this social stuff, but then actually switch off properly in the evening and do a meditation. And I've noticed that Sharon has a shower in the evening, so now I'm sort of synchronizing my I realized an evening meditation works really well for me. So sit down, let it all go, because you get home and there's oh, I should post it here, I should do this, I should do that, I should do that. You're sort of really in this high energy level way. But I think this has been a different week this week, so it's hard to compare, but I think this has been a really good thing for me to push through, and it's been a huge sort of learning experience for me as an entrepreneur. And I'm sort of figuring out my outlet. So I joined this indie hackers community, which is sort of the perfect community for me. And I realised that I always have this sort of impulse to write about nerdy stuff, tech stuff, but it doesn't really belong on Squares TV. It doesn't really belong on Good to Hear. But now there's this social community where they're asking questions about what was the biggest thing you did as an entrepreneur to kind of, to go from entrepreneur to entrepreneur. I had a good story about that. It got featured sort of in their newsletter the next day when I just wrote a comment on it. Someone yesterday was talking about how do you let something go. I was I've got that blog post that I've been thinking about for ages. That's actually a perfect reply to this conversation. And then I'm part of a discussion and I'm sort of building some reputation there. Twitter, I'm building in public now. That's where I'm posting my numbers and how it feels and what's going on with that. So if you follow me on Twitter, you're going to have seen a lot more activity. But yeah, I'm just I'm learning so much, and I'm talking to all these different people as well. I spoke to a magician last week and a rabbi, and this, it's like I'm talking to all these different kinds of people, and I spoke to my a competitor. I mean, he's doing so much better than I am with his camera app than I ever will, but that's fine. We can get on. So I'm just having a really, I'm just having a good time, really, and it's been scary, but in that way that that you're kind of overcoming some blocks and some fears and some things that were holding you back a bit. So I've seen my numbers jump, and I don't, it's hard to know really why it happens, but it feels like, but I'm seeing my mailing list sign-ups for the first time, and it's like, okay, I'm doing it, and now I'm getting them from two sources because I just put two sort of half-started things up, and it's starting to grow in the way that I sort of pictured it growing and having to grow for me to this to be a long-term thing, but I had no idea how I was going to get to from where I was to, and now I'm sort of seeing it a bit more clearly, like how that momentum builds and how you compound that progress. So there we go. That's me.
Blimey.
Yeah. And as one, okay, well, I'll show you me going for a run.
Go on, as one what?
No. Have you got any thoughts on that, or shall I just go to the break?
I was just going to say congratulations on being sociable.
Congratulations on being sociable. All right, look, here's me running in the cold in Milan. That was footage of me running. Yeah, like I am tweeting out my times. I'm trying to get to 5 minutes a kilometre. I'm ambling between sort of 5:20 and 5:40, but it is also very cold at the moment, and on some days the running track that I run on is frosted, so you're just worried about slipping over if you're not careful. But I'm definitely building up my fitness. Anyway,
I was just going to do a running comment because we've entered this half marathon thing, so I've got to practice. But timing wise, like last night we were running in the dark, in a rural run in the dark means that it's very dark. on pebbly and rocky with a head torch.
No.
So I was like, but it's kind of adventurous, but you're not working on your time, you're just being outside really. But we did it. I mean, only a bit of it was that sort of slightly treacherous, more walking than running. And then after that, then we had to, a horrible thing when you've got a target of distance that's a new distance, and you're like finding an extra 500 meters, adding a loop on, because we have anyway. So you're like, are we there? Is it done yet? We're done. But I am enjoying it. But yeah, anyway,
I don't like
investing in my health.
Yes, I don't like running on like pebbly ground or anything like that. I'm just terrified my ankle's going to go and it's all going to be over for 3 months. So that's brave.
It is a risk.
Have you got feet shoes, or are you doing it in trainers, bouncy trainers?
I'm doing it in barefoot running shoes.
Yeah, there we go. That's better then, because at least you can feel the rocks.
Because I can feel the rocks and stuff. So yes, I do. Okay. I do feel that makes a difference.
Yeah. Okay. Yeah. That definitely. I'd probably be more confident. Anyway, that's investing in your feet. Invest in your ankles. Let's shoehorn it back into the subject. Listen.
So
right.
Michael, tell us how we're going to be rich. No.
What is so what really is money, apart from a giant pyramid scheme that means if you've got more money you can get more money. That's essentially the basis of all of this. The people that had loads of wealth went, oh no, okay, so we'll give you these tokens that you can fight over, but our big houses will be worth a lot of the tokens, so just remember that. And then also we'll lend you, and you'll pay interest on the tokens if we lend you from our wealth, and that's fine. And then sometimes we might invest in you, but we'll then own you to some extent, and then any work you do, we'll just need most of that. And we'll buy things that, machines and so on, and you can do your little jobs, work your hours, and we'll just be taking most of that money though, because we took the risk. We invested in the equipment. So that's money. That's my explanation of money. But really, and when you when you get out of debt and your money becomes something that you've got some money, and this is something that was, I achieved maybe 3 years ago. I got out of debt and I managed to start saving. And in COVID, it made it very easy COVID, I was doing well with my app and I was able to put some money aside each month, and there was nothing to do to spend it on anyway. So I actually I sort of got a little bit of sort of extra money. I had some savings, but I'm looking at them going, inflation and interest rates. So if I'm losing it at 5% a year and I'm getting 0.1% interest, how does that work? Like that's not going to be any good to me. And so I've been meaning to try and figure out investments, and I read that Rich Dad Poor Dad book, and there's this whole idea of assets and making your money work for you. And how do you do that? You buy property. I can't afford to buy property. That's never happening in any time soon. But buy property to rent, not to live in. That doesn't count if you live in it. No, that's not an asset. That's a
home.
Money pit.
They call it a home.
Yeah, a home we call it. Or stocks and bonds and that kind of thing. Is the other, or you buy companies that you've read their sheets and invest in companies. But this whole thing is based around, I put money in and then I watch the squiggly line go up and down, and I hope that the squiggly line goes up. And then obviously with buying a company you need an exit strategy, like how do I get my money back out? Say the company grows massively in value but they never sell it, can I have my, I know I've got all this wealth invested in this company, but you're not selling or going public, so I can't really get it back. And then, so I think like going public is, it's a way that you can sort of gamble on those companies without having to like wait for them to do something. It's just like there are now stocks that can be bought and sold. But like in terms of getting into that sort of stocks market, like Sharon's using Nutmeg, which is which she was recommended by her sister, and so she's sort of trying the sort of stocks, and you can put a sliding scale of your risk level that you're comfortable with, and all this comes down to is how wiggly is the line and when can I get out. And it's like choosing like how wiggly is the line and knowing when is the right time to put some money in and when is the right time to take some money out, and that's the whole game. And depending on the different type of thing it is how wiggly the line's going to be. So if it's a house, it's sort of like pretty much because of everything is oriented around house prices going up. It's slowly like just ticking up a little bit. And with rent, you're getting your rent. But if you go to sort of like really risky stocks, it's going up and down wildly every day, and it's completely unpredictable. And so you sort of go, okay, my high risk, I put some stuff on the random thing, and then my low risk, I have some long-term stuff. And then there's compounding, where like the more you get over time. But yeah, it's this game of I don't know where I am on the curve at any particular moment in time. Am I? And that's the whole game. And people act like they can make these predictions, and maybe they got lucky and then they think that they made a good prediction about the market. But it's really like, here's some random ups and downs. Try and sell when it's at a peak, but you have no way of knowing.
Try and get it right. Yeah. I mean, I know a few people and have known a few people over the years who've done that day trader thing where they've sort of made it one person I know ended up kind of making it their job. Especially after COVID affected their normal business, and then a couple of people I know have done it as hobbies. I've just never had I sort of conceptually understand it, but I think it goes back a bit to this conversation we had one time. I think it was about money, and then Katie emailed us and said you're forgetting about wealth as being different from money. And being me with very little inherited or given to me, pretty much nothing. I've always thought of money as being something that I have to earn, and that
Yeah.
money is something that I have to spend. And I've never really thought of it. Of course, I've thought of savings, but in a like adding it up. I earn the money and then I put some to one side, sort of thing. And then when I've saved up enough, I can do a thing, which is none of this has got anything to do with investing at all.
Yeah, exactly. It's how I've always thought about money as well. Like, you earn it and you spend it, and then that's how. And then
And if
maybe
you need
save
more,
it, but what's
you
the
try
point
and
of that?
work more.
Or like, yeah, you work, you get paid for your time, and that's it. But that's not how they're doing it.
No,
And
I don't. Yeah, I mean, I think I'm in a slightly different position to you in terms of like we're debt free, but we have a mortgage. So we have a mortgage on property, and I am pretty privileged that in a way that, though I say that, but I am not privileged. I had to work for my mum, but like Nick and I between us have managed to we have a house here in Croatia and we have one in England, and then. But I also recall I was looking at pensions recently and retirement and things like that. Not that we've spoken about retirement, and I don't have any. I understand that continuing to be active in my brain and active in my body means that I will actually potentially live a longer, healthier life. But I don't have to work for people I don't like. And that's kind of I need a little bit of a buffer zone of being able to go, you're horrible, I don't want to work with you. Bye. Or I don't want to do that project, it sounds wrong. And
financial freedom, they call it.
Financial
freedom is the
In
next
my
level,
20s, surprisingly, I probably put money into a pension for a few years.
Right.
But then haven't since. And now I'm like in my mid to late 40s, I'm like, this retiring business, that's not so far away for, if I'm going to go down. And it's like, well, what's that going to look like? And I think I remember, so this investment thing, this bit where you can sort of take some of your savings and make it work for, is that the phrases one uses in investment? Make it work for you. Make my wealth work for me. But where do you start? And can I be asked? I've put more. I think it's the can I be asked? Am I interested enough in the wiggly line thing that you're talking about? It's like, God, I'd rather be gardening.
Yeah, but the fact is, it's sort of that the Rich Dad Poor Dad book. He's sort of a bit condescending about the idea that people are so scared of losing any of their hard-earned money that they miss out on this whole world where you can get money for free. And that is the first thing you've got to be able to steel yourself to. And it's why Sharon's sort of using this Nutmeg app, and it's not been a good time for stocks and stuff. And even though it's she went level 4 out of 10 risk level or whatever, and it's it's tough to see your money go down for no reason. I find it almost. I laugh at her about it a bit. I'm like, I'm so bad. I'm so sorry. But this is just part of it. If you see money as this thing, this finite resource that you have to earn and save and spend, it's hard to switch into this thing. It's where your wealth can be some arbitrary number, and it's going to go up and down, and you just have to sort of be patient and just assume that some guy on the other end is not being a complete tool. I
think part of it though is that it's not really for free, because you've got to worry about it, and that costs you something. You've got to I think it's like, I was only half joking when I said I'd rather be in the garden. I'd rather be investing an hour of my time mulching in the hope that my garden is more resilient to the sun's rays come midsummer than reading about what nutmeg is and deciding what the risks are. And then and I think so it's. But I'm not saying that what I'm saying is right or responsible or any of those words. I'm just saying that in the same way that cleaning the bathroom isn't the most exciting task. But at least when you've cleaned the bathroom, you've got a clean, shiny bathroom. Like, putting this money, I'm going to have to wait a long time to get happy, aren't I?
Yeah.
For this wiggly line.
I mean, but conversely, you could end up with a lot more money for free, and it's actually like a very small amount of effort to do it, right?
True.
Like you're saying, like I'd rather spend an hour in the garden. Like once you've chosen which, I mean, yeah, maybe you do some research, maybe you listen to recommendations, but once you've gone, okay, I've decided I'm going to put like X £100 or £1,000 or whatever on in this thing, it takes 10 seconds, and then if it goes up, it's like, well, that was 10 seconds well spent. But it is by putting the money into an investment, you're taking it out of your available money, and you can't, it's like you've got to say, okay, this is money that I don't actually need for my life. And I think so I used this Summit tool recently, which had like a personal finance modeling thing. It's this sort of node you drag and drop and you plug things into other things. And his like reference was like have like $5,000 savings and then sort of make investments with. And then you think of your savings as basically, if tomorrow I suddenly need some money, I'm sort of, what do they call it, like fluid or whatever. Like I can get that money and use that. And so like your savings are almost like I can get to that now, and then after that you're thinking more in terms of longer term investments of different time periods, and sort of, but it really, like, I think for sort of the higher risk types of investments, you have to think of it like gambling. Like, I need to be able to afford to lose all of this money before I'm going to put it in this thing. Maybe like bonds and things that you're kind of committed to a bit long term, and the people are relatively confident that that's going to go, but you never know. You don't know what's going to crash. You don't know what's going to happen. The markets do tend to like recover one way or another, don't they? And like this growth addiction is pretty much the way the world works. So it's probably going to go up. And then it comes down to like the more you can put in, the more benefit you get each time it ticks up a bit,
bounces up a bit. Yeah,
but
I did used to buy that. Yeah, go on, you've got.
But what I can do for the next segment is I want to tell you like the concrete experiment that I started that like helped me really think about this. And actually for the break, I'll show you. It's the Bitcoin graph. So, like getting a broker, I don't know, I did talk to someone, I was like, do I get a broker or something like that? But then there's the apps but then actually, if you want to try a random wiggly line going up and down, probably the lowest barrier to entry for a riskier, like a more like crazy market is cryptocurrency at the moment. And it's really easy to just like put a bit of cash in and like try it. And that's kind of what I thought, well, Sharon's doing the nutmeg thing. I'm gonna sort of take a bit of a shot on the crypto thing. I'll put some in the proof of stake. I'll put some in the big ones, and I just want to, because I had this idea. It's like, what I want to try is, okay, I've got this thing I want to buy that costs X amount of money that I can't really afford, and because one of the rich dad poor dad things is like, use your don't buy luxuries with your normal money. Buy luxuries with your financial asset gains, like with your stock market gains. Like if you have a good week on the thing, cash some out and go on holiday. But don't spend your normal money on holiday, your money that you worked for. And I was like, okay, that's interesting. And there was this thing I wanted to buy that I still, well, spoiler alert, I have not been able to buy it yet. But that costs sort of in a range that meant, okay, like if Bitcoin, I made a little calculator for myself, and I was like, how much do I need to put in for it to, if it goes up by like 10%, I can then cash out and afford this thing. And also, like, how do I do that? And one thing I read, I was like, oh, do I need to do like algorithmic trading to watch the price and check when it goes to this level and check when it goes above this level? So just as a reference point, Bitcoin, it was around, I think, like £20,000 a Bitcoin, like, I don't know, maybe earlier in the last couple of years it was that, but then it went up, it sort of peaked around 40-ish, and then it was sort of like idling around there, and then you sort of wait when it's something sort of skyrockets a bit, you sort of like, I really should have bought some of that, and you're sort of waiting for it to come back down, like waiting to find what like level it's going to settle to, because you don't know if it could just keep going up, you don't know. It's like, do you just get in or do you wait for it to drop a bit? Do you hope for like a sudden crash and then try it? But I was like, okay, look, it's down to like 36, and it seems like, I don't know if it's necessarily going anywhere, so I'm just gonna, like, you don't really know, so I'm gonna try it now. And this was sort of around like in December, and I thought, right, if it goes up by like 10%, I can afford this thing. And then I looked into it, do I need to do it? But actually, like, when you buy a stock, you can set the maximum price you want to pay for it, and when you sell it, you can set the minimum price you want to sell. So it's like, you can either just, so there's like a drop down in the Bitcoin app, which is like, pay the market rate, whatever it is right now, or a limit buy or a limit sell, where you say, okay, I want it to be, so I was like, okay, I want it to be, did the maths, and I said, okay, when it hits this level, sell this much, and I've got my money for my thing. And that was like, okay, cool, that's a good reference point for this. And then also when I tried to buy it, I was like, well, I want it to hit like 36 and before I pay for it. And so I sort of created a limit buy kind of thing and did that. And then you're sort of sitting there going, okay, oh, but if it keeps going up, I'm not going to be able to buy. It's that order's going to just stay there. And the whole thing is like, what are the orders? People can put whatever price they want into the market. They say, I'm willing to pay this much, and they can just leave that there indefinitely. So that was kind of my algorithmic trading thing. I've just set up this sell, and like, it will only get triggered when the market hits a certain level and not before. And so then the dynamic that now that I've got a horse in the race, I'm like, okay, first thing is, okay, I can get there quicker if I put more money in, but don't put more money in than but remember that I could lose it all. So careful, but if I put a bit more in, then it can get to that level. But then you start to notice the dynamics. It's like, when it started, so early on it started going up, and I was like, oh, like I was nearly there. And then I sort of thought, right. But the downside of selling as soon as it gets to that level is, what if it keeps going up and up and up, and I've sold it for too little? I could have got more for those tokens. And you go, okay, but you sort of have to commit to the strategy, because otherwise it's like, because if it goes down, if it just touches it and then goes down, then you won. Like, but you've got to decide what you want to do. You've got to have your strategy. And like so it went up, but then it didn't quite hit it, and then it's been going kind of dropping and then it really severely dropped last week. It like really crashed down to like, I can't remember what it was. It was in that video, but it's like it's been in like 25. It dropped below 25, and I was like, okay. But you've got to just have this. You've got to sort of have a certain amount of emotional detachment from it and say, look, I knew this. This isn't something I need. Like, I'm not paying my rent. I'm not relying on this gamble to pay the rent. And I feel like it just means I'm going to wait a few more months, and then I'll get this thing. I'm pretty confident that it's going to, be fine. But then, maybe Bitcoin crashes. But then the good thing about that is that Bitcoin's not burning the Earth's resources, so maybe that's good too. But yeah, that's me talking for ages about my experiment. I don't know if that's sort of like.
No, I think that having a strategy thing is really key. And the other thing you made me think of is that, when you said spend it on something, a luxury, and this is a weird, I think about, I don't know if it's weird, but anyway, I've never, so I don't like, I was just trying to think about whether or not I would, if I were to take a few £100 or £1,000 or £100 or whatever and put it into something, right? What would be my strategy, and what would I care about? Because I know there's a lot of and then when you were talking earlier about what are you going to put it into, one of the things I was thinking about, because it's another way of showing confidence in something. So for example, if I bought some shares in something to do with solar energy or electric cars, something that I think it's like a vote as well, isn't it, to
Yeah,
say
yeah.
I have faith in this part of the future. Because actually I'm in a lucky spot at the moment. I don't like most things I want I can buy. And maybe I'm not shooting high enough. Maybe I should want more things. I don't know. But do you know what I mean? Like, so there's a bit of like, what would be the incentive to me? I mean, having free money always sounds really tempting. And there's no way that's not tempting. But one of the other sides of things I end up looking at a lot. I look at exchange rates a lot because I live in 3 currencies pretty much. And then I did a project. So I've got pounds, Croatian koruna, and euros, which I have different things that I have to pay out of. And then because, for example, for the restaurants Brighton business hosting, so a lot of things are charged in dollars. And so, you can lose a lot of money just by paying in the wrong currency through the wrong bank account, literally. And I started properly looking into this and being quite religious about it when we did that big motorcycle trip, because I worked out that it could cost me £2,500 in bank charges for a year of living, which is a phenomenal amount of money. So, and then recently I've been a bit more careful of, pounds up against the corner, better top up my corner account today, because it's going to, that's free money. In a weird, that's £100 sometimes if you like paying a big bill, or I don't know. Do you know what I mean? So it's like so I am interested, but I tend to look at it in a not spending or not, or
like you got to be prepared for it to go down.
I'm
that's
stuck
the problem.
I'm stuck in a, dare I say it, sort of working class mentality of not having wealth, and therefore not trusting it, not expecting it, not I might say not necessarily wanting it, but it's just not in my thought processes.
It's the irony of not wanting to think about it is our lives are ruled, like the banks are doing this they're doing this to us all the time. The fees, the interest rates, the asymmetry between what they can pay us in interest and what we have to pay them in interest, it's so exploitative. And if we're not like at least trying to understand that thing, like realizing that my money in my savings account, I can get to it, but it's massively losing value every single year. Like 5% a year is so much. And if you have something that's, and then this whole compound growth thing, if you have some, the downside of my experiment is that I don't compound any gains, because I take out immediately and I put it back down to the level it started at in normal currency. But but that compound interest payment, it's just going to decimate what you've got, and these banks are just doing it to us all the time. And if we don't sort of like try and develop a bit of financial literacy, we sort of stay stuck in that mindset, and it's
it is so much about financial literacy, and it takes time and effort to become literate in this new language. And the incentives are less when you have little money. Like, I still, I'm in my mid to late 40s now, and I put my cash card in, and I'm still excited when I hear it go, because I had so many years when I was so skint, and it was like I never, I don't know, in the early, I'm thinking just as I finished university or a sixth, I put my card in and pray that there was a fiver left. And it's just and it's shifting myself to speaking totally personally out of that mentality, and going, look, actually, because we've spoken. So I think there's something about, you've mentioned it, I think in part with the sort of the fact that Bitcoin isn't burning the Earth's resources, but you can actively seek out funds that are divested from fossil fuel, that are divested from the evil things. And I think, though, for that's more of a impetus for me as well, to go, okay, because I have got this pension pot, frankly, that I'm ignoring, because I'm like, la la la, not sorting it out. Quite literally. And I think, I could take that'd be like, right, in the interest of making sure it is divested, and then that might be the impetus I need to go, right, come on, You could do
Yeah.
this.
Yeah,
It's just
yeah.
something clever.
I
Yeah.
heard, I heard like trusts are actually like not all that big a deal to set up. I don't know what it means, but I heard like people don't know about, like there was this whole podcast episode. I should probably try to find where someone was talking about all this kind of thing. But there's all these things that we just don't know about as normal people, and the banking industry, all that industry is set up to maximize jargon, maximize how it looks like we normal people couldn't do it, but it's kind of bullshit.
Yeah,
It's all
yeah.
sort of like made up. You know,
I,
it's they just want it to sound impenetrable but it's really they're just like a
yeah.
line's wiggling up and down, and they're guessing when it's going to go up and guessing when it's going to go
Yeah.
down.
I mean, it's even teaching us that, like, in many ways, that a mortgage is a thing that must be paid off. Which, of course, if you've got a mortgage on your home that you actually want to live in as a retired person, you want to be living in a home that has no mortgage on it, if you can, or whatever. But if you're getting a property as a buy to let, or you want to rent it out, there is no incentive whatsoever to pay off the capital on that building for a million years. Like, do you know what I mean? Like, you can
Yeah, if
literally,
it's more's coming in, more it's cash flow
it's
at
not,
the end of it. It's like, how does it move? Like,
yeah, and it's like, it's those kind of mindsets of being comfortable with, like, you know, either money being locked away. What you said, you know, again, I have got, after a number of years after my father died, I've become much more aware of having that that sort of like, how long, having access to emergency cash, and that it needs to be more than a week's wages. It's got to be that sort of 6 months to a year runway, I think, not $5,000. But, you know, it's like, if your world collapses, how much do you need to keep going? But once you're beyond that, you can start being a bit, you know, I think this is a timely chat. I'm glad you've been doing this experiment, because it's time for me to revisit it. Though you know, there's other things. Yeah. So, but I do try and buy things, like what we haven't talked about, and maybe we should leave for another time, is buying things like art.
yeah,
and
that's
owning
another
things like art.
asset.
That's like,
Yeah, that's another thing that
you
you
know,
hope will appreciate, and
yeah,
etc.
but
Right?
it may or may not. So, but having, you know, a few things around you that, you know, should stand the test of times in terms of durability, and potentially, you know, a pretty picture or an attractive picture will always be an attractive picture. Even if it doesn't gain interest, it might be something it's never going to, like, run out, you
Yeah,
know.
yeah. I mean, for me, I want to sort of like finish this up with is this. You Google celebrity net worth, right? And there's this idea of net worth, and then I'm like, what's my net worth? What the hell does that even mean? What is net worth? Net worth is I own assets that say, look, I've got a house worth this, I've got a painting worth this, I've
Yeah.
got like stocks in this, and I've got like, yeah, I don't know, like all these different investments, and when you add those up, that is now my net worth, and that's what they're talking about. But if you don't even understand that world, which like, trust me, I just did not understand. People, anyone listening, like, I don't know, I sell my time. That's always been what I thought you had to do.
Yeah.
But if you can get out of selling your time and gain that financial independence and have enough, instead of just going and buying stuff, like people win the lottery and they buy stuff, you know,
Yeah.
and that's not what money is when you've got enough that your basic costs are covered, and you don't have to like live a life of luxury. You can create a thing so that you don't have to do that job you hate anymore, or you can try something that you couldn't try before. And
Yeah.
by sort of not getting overexcited and carried away by having some numbers in your bank account and going, okay, let's have a system, have a process of, okay, I take X amount out, I take Y amount and put that there. I've now got again, not financial advice, but I just heard someone say, like, you just set up an automatic thing. I've got now like got the money in the crypto things, but now I've just got an automatic buy some every week. It just puts like a tenner out, and or like but make it 50 or 100 or whatever. Just like have a constant little kind of drip feed of cash into something like that, and that's how Nutmeg works as well. And then you're sort of like leveling out the variation in that kind of when to buy challenge by just having a robot do it. And then, like, what all I do Monday morning is I kind of pick, okay, I think Ethereum, or is it going to be Bitcoin, or is it going to be Cardano, or is it going to be Tezos, or whatever. And then I just know that, like, some of that, I think it's so much more likely to generate some sort of value down the line than if I just had it sitting in my savings account, deprecating in value in a very reliable way. Like, it's good to have some in there, but to make for as you say, like a runway, an emergency. But the rest of it, like, again, like, it's like, how much do you need as well? Like, how much can you get back? How much can you afford to lose? Like, and I think like £10 a week is, for me, like, I can go. I mean, that would easily be able to waste that. So let's just put it in a speculative thing and just get your brain. And then just I've got I got the widgets. I installed a couple of widget apps so that when I look on my home screen I can sort of see where it is and go ooh and you get addicted to it for a bit, but now I'm like, that's doing its thing. We'll see how it goes.
Interesting. It's all very interesting. I think it is. It's like reducing your dependency as well on single points of failure.
Exactly. And so what I'd say for you, like, I would I'm going to send you a link to this Use Summit thing. So what I found really interesting was, like, you go create a there's like a template for personal finance, and it's just a really interesting way of modeling like what your bank balance looks like over time if you try different things, if you have different engines of, like, put X amount into savings, keep that at anything above that level of savings, do this with it, XYZ, and you can sort of start to really go, because I think there's nothing like seeing a bank balance to make it not abstract anymore, to make it like, oh right, I would have right, and it's hard to think about because we're so, like, emotionally invested in that bank balance number in a way that everything else seems so abstract and difficult to think about. But I found this tool, usesummit.com, really kind of useful for getting my head around all this stuff. So there we go.
Good. Okay, right.
All right, let's
Shall
finish
we call it?
Yeah. Thanks for listening. If you like the podcast, go to grampodcast.com. Send us an email, hello@grampodcast. Where can people find you, Ivanka?
I'm at Ivanka on Twitter.
I'm at Michael Forrest on Twitter. I'm tweeting.
Wow. You're tweeting. What a crazy world.
Away like a crazy dude. And yeah, like, we'll be back next week. Have a good week.
Thanks for listening.
Thanks for listening. See you. Bye.
Bye.